One of my favorite growth stocks, Nvidia, which I've had in my portfolio since 2017, just hit the $1 trillion club for a brief moment last week. The stock has been going bananas since ChatGPT and generative AI became Wall Street's latest best friend. But should Nvidia be worth $1 trillion, or is it overvalued? In this video, I'm first going to discuss my model for valuing Nvidia. Second, I'm going to discuss whether or not I think Nvidia is overvalued. And finally, I'm going to go over my game plan for investing in Nvidia. All this right after.
I am not a financial advisor. This video is for entertainment purposes only. Learn to invest like a wolf at your own risk.
All right, welcome back everyone. To first explore whether or not Nvidia is overvalued, I'm going to compare Nvidia's generative AI moment to Apple's iPhone moment. Since Nvidia's founder and CEO, Jensen Huang, constantly refers to generative AI as the iPhone moment for his company. So Steve Jobs and Apple introduced the iPhone to the world in 2007. And as we all know, that was a game changer for Apple and the world of computing and communications. And today, Apple is the most highly valued company in the United States with a market cap of $2.8 trillion. Apple closed on Friday with a stock price of $180.95 and a PE ratio of 30.7. Apple is an absolute juggernaut of a company. To compare Nvidia's generative AI moment to Apple's iPhone moment is like comparing the next basketball star to Michael Jordan or the next hottest quarterback to Tom Brady. So this model that I'm about to use to value Nvidia, as you will see, is highly optimistic. To start, I'm going to take a look at Apple's full year net income in 2006, and I'm going to compare that to its full year net income 10 years later in 2016. And I'm starting in 2006 because that was the year right before the iPhone was introduced. As you can see from Apple's 10K statement, its 2006 net income was $1.989 billion. And if we fast forward 10 years later to 2016, its net income was $45.687 billion. Apple increased its net income by nearly 23x in 10 years for a compound annual growth rate, or CAGR, of 36.8%. This was a massive increase in its net income. If I apply the same growth to Nvidia, I'm going to take a look at its net income in the fiscal year ending January 29th, 2023, right before the recent hype cycle in generative AI started. Now, ChatGPT was actually introduced in 2022. So if I really wanted to compare apples to apples, I should be using Nvidia's net income from the fiscal year ending January 30th, 2022. But the reason I'm not is that Nvidia's net income from that year, for some reason, blew up to over $9 billion. So I'm treating that as an anomaly, and instead going to use the $4.368 billion of net income that it earned in the latest fiscal year ending in January of 2023. So if I apply a 36.8% CAGR to Nvidia's net income over the next 10 years, that would give me a net income of $100.3 billion by January of 2033. Apple's PE ratio is currently 30.7. So I'm going to apply a 31x multiple to this value to give me a market cap of $3.1 trillion for Nvidia in 10 years. Nvidia currently has around 2.5 billion shares outstanding. Assuming no changes in the number of shares, that would give me a stock price of around $1,244. Nvidia closed at $393.27 on Friday. So this would give me a 12.2% annualized return over the next 10 years, assuming my model is correct. So the question I have to ask myself is whether or not 12.2% annualized return over the next 10 years is worthy of my investment. So first of all, I used Apple's legendary net income growth from 2006 to 2016. And Apple is one of the greatest companies of all time. It's like comparing the next basketball star to Michael Jordan or the next hottest quarterback prospect to Tom Brady. As amazing the prospects of generative AI, I'm still applying a highly optimistic net income growth scenario to NVIDIA over the next 10 years. And maybe I'm right to do so, but it doesn't give me very much margin of safety. The average annual return of the S&P 500 after dividends is around 10% over long periods of time. When I invest in growth stocks, I aim to capture an annualized return of at least 15%. So a 12.2% annualized return, coupled with the fact that I'm giving a very optimistic outlook for NVIDIA, comparing it to one of the greatest companies of all time, doesn't quite reach my threshold as an investment. So in my opinion, while I don't think NVIDIA is wildly overvalued, I also don't think that it's a great investment at its current price. So what is my game plan? To give myself a minimum 15% annualized return on NVIDIA based on my assumptions, I would need its stock price to pull back to around $308 per share. As I mentioned earlier, I've been in NVIDIA since 2017. I currently have just over 20 shares in multiple accounts. And since I first started investing in NVIDIA, I've taken all of my profits off the table, such that my current cost per share is below $0. Because of that, no matter what happens to NVIDIA, even if it goes to zero, there's no way I can lose any of my principal investment. So I don't feel the need to FOMO in on NVIDIA. My current plan is to just wait for a pullback down to that $308 level. And if I get that pullback, I would highly consider adding to my position. If I didn't already own NVIDIA, I'd probably start a quarter position right now, even at its current elevated level, just to get some exposure and just in case I'm wrong and the stock never pulls back. By starting a quarter position, I would get to participate in the upside with minimal risk. But I would also have enough money to buy the dips if there is a massive pullback. Now, just how likely is it that NVIDIA will pull back to $308 per share? What I like to do is look at the options market. And if we look at the December 15th, 2023 put options contract for the $310 strike price, the options delta is 0.19. And many traders use delta to approximate the probability that the stock price will reach that level. So it looks like the options market currently thinks there's around a 19% chance that NVIDIA will pull back to $310 a share by the end of the year. And if it does, I'll be ready and waiting. On the other side of things, I also don't feel like I need to sell any more of my shares, since I've already taken all of my profits off the table. However, if NVIDIA continues to skyrocket, I do plan on taking more profits off the table if it hits $1,000 per share. That would be a $2.5 trillion market cap, which I think would be way overvalued, considering that I think it should be worth around $3 trillion in 10 years. Even if it reached that level, I don't think I'd sell all of my shares, just because you never know how insane a market can get sometimes. I mean, who knows? Maybe investors want to pump the shares up to a $10 trillion market cap, which would be $4,000 per share, an absolute bonkers. But if they did, I want to have some shares around so I can keep selling into that bubble-like scenario. All right, so let me know what you think about NVIDIA. Share your thoughts in the comments. And if you enjoyed this video, feel free to share it with your family and friends, drop me a like, and consider subscribing to the channel. Thanks for watching, and I'll see you soon.